market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Verdon in London. Well, tech stocks are leading the gains on the Stock 600 this morning. ASML hitting a record, and that's after TSMC forecast higher than expected capital spending this year. Asia's most valuable company also forecast revenue growth close to 30%. Let's get analysis now. We can speak to Matt Bloxham, technology analyst at Bloomberg Intelligence. So, Matt, these look like pretty solid numbers, and global markets latching on, it seems, to the capex numbers in particular.
Yeah, that's right. So for this forward year, they're talking about a capex range of $52 to $56 billion, which is around 15 to 20% higher than the street was expecting, and a big step up from the 2025 figure. And clearly underpinning that investment is the AI boom and their ability to support customers with their demand. And it's not just about investing in Taiwan, but it's also about investing more into the US. And obviously we all know that Donald Trump is incentivizing and encouraging companies
he might like politely,
that, to invest there. But also actually interestingly in Europe too, and looking at Germany. So, you know, this whole kind of sovereign AI supply chain resilience really kind of coming through in their numbers. I think there's a kind of a balance of optimism and confidence and uncertainty there, though, because, you know, they tried to kind of demonstrate in the Q&A that they're very thoughtful about their capex spending plans. The lead times with investors is 2 to 3 years, and that there's limited risk to this capex number. But, you know, the CEO did also say, you know, is the AI demand real? They hope it is. You know, they're not sure, because if it does start to fall away, then that capex number starts to kind of look a bit exposed and potentially leaves them with overcapacity, which would then put us into a bit of a kind of supply-demand imbalance the unfavourable way. So some interesting kind of comments in the nuance there.
Yeah, and it was interesting listening to CC Wei saying, well, kind of dismissing two of the other key concerns that have been floating around. You know, one, the memory chip shortage, and him batting that away, but also when it comes to constraints in the AI data centre build-out and potential power limits there, not so worried about those either. Does that hold water?
I think certainly the memory chip to a degree. Power, certainly in the short term, probably okay. But I mean, I think, you know, obviously the issue on memory chips is there's so much demand for these, particularly in AI accelerators, that they're sucking up all of the capacity out there, and that might have negative knock-on effects to consumer equipment. Now, TSMC is mainly exposed to the high-end smartphones, like Apple, for example. I think their price sensitivity of end customers is probably going to be lower, and also someone like Apple has huge purchasing power, so probably able to kind of tap into whatever capacity is out there. The power issue, I'm a little bit more surprised about those comments, because, you know, clearly the race to kind of bring more capacity on stream to kind of support these data centres is really kind of up the news agenda right now. So maybe in the near term that's okay, but perhaps kind of on a 3 to 5 year view there could be some bigger question marks about that, you know, because a lot of this is going to be delivered by kind of small nuclear reactors, and there's a long lead time to get those up and running.
OK, Matt Bloxham, technology analyst at Bloomberg Intelligence. Thank you so much for that. Well, Bloomberg's going to be speaking to the CFO of TSMC. Catch that interview from 11 p.m. this evening, London time. But we can think now about how it impacts the markets. Traders really have been closely watching commodities as well after the US held off on imposing import tariffs on critical minerals as geopolitical turmoil pushes up the price of precious metals. With me now to discuss the latest market moves is Kokou Agbo-Bloua, who is Global Head of Economics, Cross-Asset and Quant Research over at SocGen CIB. Good to see you, Kokou. Nice to have you back for 2026. I'm just going to start by going back to the tech, because Matt pointed out a few interesting things there. And the big question, I suppose, is if these earnings fuel AI optimism broadly, or if it's that you see more of a pull away from US big tech and more towards Asia and other parts of the world, Europe as well.
Absolutely. So I think there's been a very important theme last year around the de-dollarization, diversifying away from the US, particularly after Liberation Day. But one of the things we have to realize is that the earnings power of US companies have essentially outperformed. And whilst we had an exit from the US, investors were forced to be pulled back in U.S. equity market because of the earnings momentum. So I think there is some diversification, but if you look at return on equity, profitability, innovation, creativity, etc., U.S. companies are still ahead. And the quick point around AI, it's interesting to think about the scale. I think it's not a sprint, it's a marathon. Mm-hmm. So total global GDP is around $110 trillion. Labor income share of GDP is around 50 to 60%. Let's say $60 trillion. Knowledge workers, 30% of that. So let's say $20 trillion. So if AI has 10% total addressable market, so 10% of that 20 trillion, we're talking $2 trillion in terms of potential revenues and cost savings, etc. And this is where, as AI gets older, because it's a 3-year-old entity, so as it becomes more of a teenager, then the market share will go from 10 to 20 to 30%. And this is where the views for investors that it's not a bubble, it's more of a boom and part of a marathon.
So let's say it's in its adolescence or getting near there.
Yeah.
How much pressure could it put on wage inflation if we flip this into a macro story?
Yeah, very good point. And this is the whole debate around labor productivity. So today there's a lot of use cases that are being deployed across companies, but there still needs to be empirical evidence in terms of lowering wage inflation, because today we see sticky service price inflation. However, if you look at developers or IT workers, the new jobs offering is down 30 to 35% since ChatGPT was launched. So we are clearly seeing an interesting dynamic, but it's maybe early days. But over time, this will clearly put pressure on wage inflation, and that ultimately may solve the debate as to whether inflation is going to go back lower over time or whether it will be sticky for longer.
So then, if you take it back to stocks, can the US stock momentum continue if you don't have as many Fed cuts as priced?
Yeah, so this is also an excellent point. And I think that the Fed cuts and monetary policy cycle is important to remember that it was in response to the inflation outbreak we had with COVID. So we are essentially going back to R star, which is the neutral level of interest rates. And now it's more around the earnings power of companies and their ability to generate revenues. So today, the US equity market is roughly $60 trillion. Europe is around $14 trillion in terms of market cap. So we cannot move away from the US. And even if we don't have lower cuts, the view is that this capex and also the midterm election, because you have relatively lose monetary and then lose fiscal policies and measures by the U.S. administration to boost the economy into the midterm. So all of these points to a pretty robust U.S. equity market outlook.
Amid all this political risk, the threats on the Fed, is it less about sell America and more specifically just moving away from the dollar?
Well, the dollar is clearly a lot of investors were expecting the dollar being a lot weaker than it has done so far because of the resilience of the economy. So it's essentially a question of interest rate differential, how strong the U.S. economy versus Europe, for example. So I think that whilst there's a lot of noise, I see more of the view around the system or the market becoming anti-fragile, like Nassim Taleb has talked about, which is like your bones or your immune system. The more stressed it is, the more resilient and adaptive. And I think
not complacent or desensitized, resilient.
Exactly, because they've learned from the past. If you've overreacted to geopolitical news flow, you would have lost quite a lot of money. So this adaptation of the system explains why volatility in bond markets or equity has been lower. It's not complacency, it is just the market being able to discount and make the difference between signal and noise.
OK, that's interesting, because everyone's talking about this new world order in 2026, but you're saying that the way you should treat geopolitics in markets remains the same. But we're more adapted to it.
Exactly, because there was so much noise, a very high noise to signal ratio, that overreacting to geopolitical was uneconomic. And that, I think, is the sort of argument around the third law of Newton that says behind every action there's an opposite reaction. So it's really a tug of war between markets and geopolitics. But
you're talking about the Trump context, right? Let me bring this over to Asia. I've heard it said that the geopolitics around Sanae Takaichi in Japan is being underpriced. Yes, there's a lot of focus on the growth story, but not enough focus on the tensions that could be and will be and are there between Japan and China.
Yes, and I think this is clearly an area to watch. And with the questions around repercussion around Venezuela, Iran, and how China may react, I think it is important to remember that China has time on its side in terms of the growth of its economy. It's dealing with deflation forces, excess supply capacity. The latest trade exports show that you had a record export net trade of over 1.2 trillion. So this is clearly part of the concern investors may have, but our view is that it's unlikely to unravel, simply because if you remember the John Foster Dulles doctrine of the first island chain that surround China, it was a maritime blockade of China, if you will, between Japan, Taiwan, the Philippines, Borneo, and this is a strategic geopolitical strategy that was put in place by the US government. So I find very unlikely that the US will give up on that sort of strategic sort of containment of China, and China will definitely try to fight against that, but it will take time.
Kokou, I've loved this conversation. You've broadened my mind. Thank you so much for coming in. Kokou Agbo-Bloua there, Global Head of Economics, Cross-Asset and Quant Research at SocGen CIB. Well, let's get back to the earnings picture, shall we? Bank of America's equity traders had their best fourth quarter on record as they benefited from volatile markets. But Wall Street bosses are warning of a potential slowdown if President Trump's proposed cap on credit card fees comes to fruition. Here's the Wells Fargo CFO speaking to Bloomberg.
When you look at this idea, it will remove credit at a really important time from the people that most need it, and so there will be negative consequences across, of credit availability across the spectrum of credit card users.
Well, there's more to come. Goldman Sachs and Morgan Stanley reporting today. Let's get more on what to expect with Bloomberg's Charlie Wells. Charlie, could today's reports turn around the bank stock slide that we've been seeing so far this week?
Well, Lizzie, if any banks were going to change that narrative, it's going to be Goldman Sachs and Morgan Stanley, just because they are shaped so differently from the other banks that have been reporting over the course of the week that have been sending some wobbles through the market. So if you think about Goldman Sachs, you think about Morgan Stanley, they have a lot of exposure on investment banking, they have a lot of exposure on trading, and those are sectors, those are segments of these businesses that are expected to perform well. You see in investment banking expectations of growth in that fourth quarter of over 20% at both of those banks. Strength in trading as well, equities trading in particular. But look at where shares closed yesterday. There is not a lot of optimism about what these reports have been doing from the banks that have reported and these two that are expected to report today. And this is despite some blowout numbers that we saw from some of these banks. So you saw on the investment banking front, you saw at Citigroup yesterday, financial advisory in that fourth quarter, growth of 84%. I had to check that number because it is so big. As you mentioned at Bank of America, we had those equities traders, their best fourth quarter on record. And then as well, charge-offs at Wells Fargo down 16%, speaking to a healthier consumer. So despite a lot of these good numbers, not a lot of warmth in the market for financials right now.
Yeah, as you suggest, banks are a barometer of the economy, Charlie. So what's the macro read we're getting from earnings so far?
Well, it's a little bit different, and that's why there's so much tension this week between what the banks are saying and what the market seems to be responding. So if you just look at some of the commentary that we've got from top executives at these big banks, you've got Brian Moynihan at Bank of America talking about growth ahead. You have Mark Mason at Citigroup talking about how the economy has really learned how to navigate this uncertainty. And then Mike Santomassimo as well, speaking to that consumer in the United States being resilient and propelling a lot of this economic growth. But that's just not translating to share price movements in a positive way for these banks. We've been thinking about the trajectory of this rally, this long bank rally we've seen. Does it have steam? Well, I've been pulling this up every day of this earnings season, and we keep seeing that KWB bank index of the large lenders in the United States. It's tracking downward. If it's going to change, it's going to change today, but let's see when these results start to post.
Excellent reporting, Charlie Wells there. Thank you so much. Well, coming up, we're going to turn back to the geopolitics, a major shift in tone from President Trump as he says he'll hold off on striking Iran for now. We'll get more on the situation in the region next. This is Bloomberg. Welcome Welcome back to the Pulse. Oil falling for the first time in 6 days after President Donald Trump signalled the US may hold off on attacking Iran for now. We've got Brent here below $65 a barrel, currently down nearly 3%, but it's been down more than that this morning. Trump saying that he's been reassured by sources that the government in Tehran will stop killing people involved in protests. Now, the growing unrest continues to pose the biggest challenge to the Islamic Republic since its founding in 1979. Let's take a look at how we got here.
And merchants first took to the streets of Tehran in late December, angered by the worsening cost of living crisis in the sanctions-hit economy. Iran relies heavily on imported essentials, and a sharp currency slump has driven up prices as Western sanctions continue to squeeze the economy. 5 years of drought have made a dire situation even worse. Local food production has been hit hard, leaving the country even more dependent on the ever more expensive imports. At the same time, falling oil prices have deepened the crisis, with Brent crude trading at around $60 a barrel, far below the IMF's estimate of $165 needed for Iran to balance its budget. While the protests on the streets began about the economy, they spread into a broader protest movement calling for greater change. It comes at a delicate moment for the country's leaders, whose prestige suffered a severe blow after Israeli and U.S. strikes in June 2025 destroyed much of the country's nuclear infrastructure. And while the regime has faced mass protests before, it seems the Islamic Republic could be fighting for its survival.
Bloomberg's Jomana Basecci reporting for us there. Well, to dive deeper into Iran's unrest and the wider geopolitical implications, I'm pleased to say we're joined now by Roxane Farmanfarmaian, lecturer at the University of Cambridge. Good morning to you, Roxane. Iran has temporarily closed the airspace around Tehran amid the tensions with Washington, amid the continued protests. That's one of the latest developments this morning. I wonder, even if President Trump says that he's holding off for now, how much military intervention by the US remains a risk?
I think it still remains a great risk. There's certainly been assurances given to President Trump that there will be no hangings. The foreign minister was on Fox News last night and said absolutely that would not occur. And I think that has been a flashpoint for President Trump. On the other hand, it's clear that there was a larger plan by Israel and the U.S. to attack Iran at one point that has been talked about a great deal. And the very fact that, for example, the UK government has closed its embassy in Iran and that a number of American servicemen and officials have been pulled from bases around the Gulf is indication that there is still a very great flux in the situation.
OK, so it remains a risk. We had the German Chancellor Friedrich Merz saying that regimes that depend on force are in their final days. Could it be that we see the regime collapsing even without US intervention?
I think over the last couple of days, we've seen a huge number of pro-regime demonstrations, which is the effort by the Islamic Republic to show that it has a base. Many of these demonstrations were in response to the funerals that are taking place of government security officials that were killed in the last several days of the actual uprisings. Today it's quite calm, and so I think that it's not quite correct to say that it depends only on force to survive.
And we've had Gulf states lobbying Washington to not strike Iran. I wonder how much leverage the likes of Saudi Arabia, Qatar, the UAE actually have over Tehran and over the US and its decision-making at this stage.
I think they have quite a bit of leverage over Iran, and I think it was because it was made very clear that the Trump administration was going to attack if there were further official killings, such as hangings of those that had been arrested, that Iran pulled back. President Trump himself has said that he does not listen to the other Gulf states and their concerns. He makes his own decision, which I think to some degree is correct. On the other hand, economically, the effect on the Gulf oil price, as you pointed out in your report, has been significant. And I think one thing that President Trump does not want to see is a rise at the gas pump right before the midterms, which is something that a conflict in Iran could certainly trigger.
You do wonder if that's perhaps why he's pulled back today. But I also wonder how these 25% tariffs that he's threatened on Iran's business partners could impact the relationship between Iran and China if they are to be implemented. Would it dilute Beijing's desire to have influence in Tehran?
Well, so far we've really seen that a lot of that influence is in the form of rhetoric. The Chinese relationship with Iran has not been substantial. It didn't support it very much during the 12-day war in June, and it has not really provided Iran the arms that Iran has asked consistently for to protect itself. So in terms of oil, the Chinese have gotten a huge discount in the oil shipments that it receives from Iran, even though it's the largest client of Iranian oil and it's therefore very important to Iran. That is not necessarily a very lucrative arrangement for Iran. So I think what we're seeing is that Iran is very isolated. The 25% tariffs will only hit the middle class even more and the people of Iran, because at this stage the sanctions are brutal, and that's one of the reasons, of course, why the economy is doing so badly. The currency has dropped, and the protests began in the first place.
Well, yeah, for ordinary Iranians, is outside support likely to help or really just expose them to harsher retaliation from the Iranian government?
I think certainly the response of the government is that if there are protests, it reflects badly on the government. It shows a weakness, and it has viewed the protests internally as a domestic threat, as just an extension of or linked to the threat coming from abroad to attacks. So they feel very strongly that putting down the protests was absolutely critical to show strength on the part of the government over its own borders and its streets. So I think any further tariffs will not be to the benefit of the people, and an attack is a very complicated thing for Iran. This is not Venezuela. The capital is thousands of miles inside the borders, and the government has shown absolutely no fracturing in the period of the protests. There's been a great deal of support by the military, for example, and by the security services. So I think any outside intervention could actually be counterproductive. And I think many of those inside Iran are clear that they do not want to have outside intervention. They want to take the change in regime. There's a lot of debate inside Iran about regime change or regime shift. Clearly, the government has hit the wall in terms of how badly the economy is doing, and there are not a lot of solutions. So some change needs to take place, but it's clear the Iranian people, if you look at their slogans, if you look at their interviews, want to take that forward themselves.
Yeah. Roxane, a pleasure to have you on the programme. Thank you so much for your insights. Roxane Farmanfarmaian, lecturer at the University of Cambridge. Well, coming up, we'll stay with China. Mark Carney is the first Canadian leader to visit Beijing in 8 years. We'll talk about why world leaders are flocking there next. This is Bloomberg. Good morning and welcome to The Pulse. I'm Lizzie Burden in London, and these are your top stories. ASML hits a record on renewed confidence in the global AI boom after chipmaker TSMC gives a strong outlook for the year. Holding off for now, Donald Trump says he won't strike Iran after being assured that protesters are no longer being killed. Plus, splashing out. Big spending on watches and jewellery over the Christmas period helps Richemont sales to hit a record. Well, let's dive into the geopolitics now. An exploration mission of 13 soldiers from Germany is due to arrive in Greenland as European nations seek to ensure security in the region and respond to US threats over the island. Denmark says a fundamental disagreement remains following a meeting with top US officials. Trump, meanwhile, is doubling down on his position regarding the island.
We have decided to form a high-level working group to explore if we can find a common way forward. The group, in our view, should focus on how to address the American security concerns, while at the same time respecting the red lines of the Kingdom of Denmark.
We need Greenland for national security, so we're going to see what happens. We have a very good relationship with Denmark, as you know, we'll see. But, we're doing the Golden Dome, we're doing a lot of things, and we really need it. If we don't go in, Russia's going to go in, and China's going to go in. And there's not a thing that Denmark can do about it, but we can do everything about it.
Well, for more on this, I'm joined by Bloomberg's Copenhagen Bureau Chief, Sarah Scholin. Sarah, welcome back. Just talk us through what progress actually was made in this Washington meeting. Good morning again.
Good morning. One of the key things, as the Danish foreign minister also said in the press conferences, they set up this working group where they now can, through a more diplomatic channel, meet and try and hash out a path forward. As Trump has repeatedly said, one of his biggest concerns is the security threat in the Arctic and Greenland, and this is what they're trying to address now. So there's a sense of relief over here that things didn't escalate further.
And how significant is it that Germany's sent troops to Greenland as well?
That is quite significant, and it's not just Germany. France has also said they'd support. There's the UK, Norway, and Sweden. And it's not just the important number of troops. It's not that many people that are being sent up there. It's more that it's raising the stakes for Trump and for the US to actually do an intervention in Greenland. Now there'll be a NATO presence, there'll be more of an EU presence up there, an European presence. So if he does want to intervene, it's not just suddenly like taking the territory from Greenland. It's going against some of its, like a broader base of his allies. So this is quite significant and a big signal to the US government that we are taking this seriously, and also don't come over here.
Sarah, thank you for the context. That's Bloomberg's Copenhagen Bureau Chief, Sarah Scholin there. Well, we can get the view from Washington now. US Republican Senator Tom Tillis says that President Trump's getting bad advice, including on his pursuit of Greenland. He told Bloomberg there's no support in Congress for such a takeover.
We need people to make sure the president has a fully weighted set of criteria before he moves forward on some of these policies. I see no path where his aspiration for Greenland occurs unless it's a negotiation and something far short of what he has in mind.
We talked to Senator Chris Coons at this time last evening, who I know is taking part in a bipartisan codel to Denmark with you and others. He was strident in his language, making it clear that NATO is at stake. Is that where we are?
No. I think we're going to get into a little bit of hyperbolic language here. Okay. Chris is a friend of mine. He's a Democrat. I could see where he's may take that position. But I've been the Republican leader of the Senate NATO Observer Group since 2018.
Yes.
I'm going there to reassure everyone that unlike what angered me last week was one of the president's advisors making the statement that it was the position of the U.S. government that Greenland would become a part of the United States.
Yeah.
He doesn't have an election certificate. He is not a member of the Article 1 branch. I am. It can be his position. It can currently be the position of the president. But the people, the people in Denmark, the NATO countries, our allies, our partners, the people who have gone to war with us, fought side by side with us, lost lives when they came to Afghanistan, consistent with their Article 5 commitment in NATO. I want to make them very aware of the fact that there is not support for this in Congress, regardless of what they may say in the White House. I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
Republican Senator Tom Tillis speaking to Bloomberg Balance of Power anchor Joe Matthew there. Well, against that backdrop of US foreign policy, China's President Xi Jinping's welcoming a procession of world leaders this year, looking to mend fences with Beijing in light of the tariff war coming from Washington. Canada's Mark Carney is just the latest to arrive in the country, with British Prime Minister Keir Starmer expected just days later. Well, joining me now for more is Diana Choyleva, Chief Economist at Enodo Economics. Thank you for being with me, Diana. This is quite the stream of leaders heading over to Beijing. Is this clearly White House diplomacy backfiring?
Not really, actually, because what is happening is that there is a thawing of the relationship between China and the US, and certainly with respect to trade. And so the rest of the US's allies are realizing that they're sort of falling behind in that sense, and going to China and trying to find this very nuanced relationship that the Western allies have to seek with China.
Well, this is the first visit from a Canadian leader to China in 8 years. Can Carney actually mend the relationship with Beijing after all that tension?
Yes, he can. And the relationship between China and Canada went bad for a very specific reason as well. And now we've had enough years passed for this to, and of course the prisoners were released, and there is a way to move this forward. But at the end of the day, we do have to realize that all countries, apart from the very small and strategically insignificant ones, and all multinationals must pick a side. They can't be with one foot in the US sphere of influence and with the other foot in China's sphere of influence.
So Canada's trip's actually about repairing trust. It's not just about getting more leverage.
No, it's not about getting more leverage, and I would say that even rebuilding trust will be very hard, but sort of riding on the bandwagon of keeping the same kind of thawing in relationship that the US is trying to achieve. Canada doesn't want to be left behind and want to pursue a similar situation. But there is absolutely no way, given where Canada is situated geographically, that it won't be one of the staunch allies and partnerships in the US sphere of influence.
OK, but what do you think that Canada would actually give China to mend the relationship? Do you think that it would soften its 100% tariffs on Chinese EVs?
I would say that we have to see, because at the end of the day, depending on what the decision is with respect to EVs being or not being a security threat, the Chinese produce the cheapest, most efficient EVs, and so if one of your domestic priorities is a greener economy, it makes no sense but to buy Chinese EVs. So there are competing rationales here and reasons why the Canadians are resisting. So, yes, I would expect that some softening of these tariffs is likely if the domestic green agenda goes to the forefront. Simultaneously, it also depends on to what extent are EVs perceived, or the technology in them, as a security threat that is on the doorstep of the US.
And to what extent could Canada provide an alternative oil source to China now that you've had Maduro's removal in Venezuela? Is that another carrot that they could dangle at Beijing?
Well, the situations are very different here because one of the more underestimated aspects of what happened in Venezuela and what's going on in Iran is the role of the US dollar in global oil payments. So it is not just about the provision of oil. It is about America taking action and trying to preserve the critical role of the dollar in the global financial system, which is very closely linked to the petrodollar system. So even if Canada is willing to supply oil to China, it will never be pricing it in Chinese yuan, and it will never be transacting in the yuan. So that's where the importance lies. Otherwise, neither the US nor America, to be honest, are against the movement of trade, but ensuring that they have the access to the trade routes and resources in a potential confrontation between the two spheres of influence.
So let's say that Canada and China can repair economic ties. What about Taiwan?
In what sense, what about Taiwan?
What is Canada's stance going to be on Taiwan? Does it turn a blind eye to China's stance on Taiwan?
Well, again, what I'm seeing from Canada is following the US in that domain as well. And what's happening in Taiwan is that we are seeing Trump being more ambivalent in his words in particular. He's not made, for example, the very telling mistakes that Biden made when he slipped a number of times that the US will defend Taiwan. But despite the words, what we've also seen is that Trump just authorized the largest military sales to Taiwan. So America remains firm in its commitment to Taiwan, but it is not putting it front and center in its communication strategy. And you would see that, sort of China doesn't really feature in the national security strategy that was recently published. But if you then go behind the numbers and look where the money is being spent and what is actually the configuration of the actions the U.S. is taking, it is very clear that China remains the primary adversary.
Well, we were talking earlier about how China didn't seem to be there for Venezuela. Does the Caracas raid really expose a hard limit to China's security credibility abroad?
Oh, absolutely. I mean, China has been trying to present itself as a credible alternative to U.S. hegemony, in particular in the global south. And we've seen with both the attack on the Iranian nuclear facilities and with the removal of Maduro in Venezuela, which was a very successful, on top of it, military operation, one that China is not in a position to effect globally. But we've also seen that they were unable to even provide intelligence warning. And their initial shock was more telling that they intended. And, of course, we've all read the story about Maduro meeting the Chinese delegation only hours beforehand. So, yes, China's credibility in terms of providing security guarantees with those countries that have forged very close relationships with China has been questioned for sure.
Just finally, we got that trade data from China yesterday, trade booming. As an economist, let me ask you, does that mean that Beijing loses urgency to address the domestic demand problem?
Oh, no, absolutely not. I mean, I've analyzed China for 25 years. They certainly have been talking about rebalancing towards consumer spending since 2004, definitely 2006, and they did very little that was meaningful in that direction. But since that very important policy U-turn in September 2024, and we've seen how policy in China has really reaffirmed that very significantly, there is finally a genuine political understanding that they need to get domestic consumption going and why they need to do it. So the political commitment is there in a way that has never been there before. However, the big question is, are they doing the right thing to achieve that? And even if they are doing the wrong thing, what's likely to happen?
OK, great to see you, Diana. Thank you so much. That's Diana Choyleva, Chief Economist at Enodo Economics. Well, President Trump has prevailed in unifying his party behind his takeover of Venezuela. All but 3 Senate Republicans voted to block a resolution opposing further military action in the country, with Vice President J.D. Vance as the deciding vote. It comes as Venezuela's opposition leader, Maria Corina Machado, prepares to meet President Trump at the White House later today. The US president has said that Ukraine's president is the main obstacle to an agreement to end Russia's war. In an interview with Reuters, Donald Trump said the Russian President Vladimir Putin is ready to make a deal, but Volodymyr Zelensky is impeding it. Trump had previously expressed growing frustration with Putin after a flurry of talks ended without a ceasefire. And Germany's economy grew for the first year since 2022 as a government spending spree helps the country overcome its lengthy industrial slump. GDP rose 0.2% in 2025 following 2 consecutive annual contractions. Questions remain, however, about the sustainability of any recovery as Chancellor Merz plans to splash hundreds of millions of euros on beefing up the military and upgrading crumbling infrastructure. Well, those are some of our top stories this morning, but coming up on the Pulse, Richemont sales hitting a record as shoppers splash out on luxury watches and jewellery. More on that next. This is Bloomberg.
Next week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all next week. Context changes everything.
Welcome back to the Pulse. Now, Richemont sales hit a record at the end of last year as shoppers splurged on its watches and Cartier jewellery. Bloomberg opinion columnist Andrea Felsted joins me now for more. Andrea, what's your read on these sales and revenue figures? We had seen big gains for the luxury names earlier this morning, but actually they're pairing now, and many of them, like LVMH, Kering, Burberry, all in the red.
This is definitely good news for the luxury sector. If you cast your mind back to a year ago, there was great hope that luxury would, not necessarily boom again, but certainly recover from its low. We had the US election that unleashed a wave of top-end spending, and that all fizzled out in April. So we got quite tough comparisons with the year earlier. So the fact that the sales, have been very positive, signs that China is coming back, that's all good news for luxury. I think why the shares are down is that Richemont also faces some cost pressure from gold, adverse currency movements, so that's weighing on its profitability.
OK, that's really interesting. I do wonder the difference between Richemont and some of the other luxury names. I know that Richemont's got the backing of the likes of Timothée Chalamet and Taylor Swift, but is that the sole reason why it's been outperforming LVMH over the past year?
It's in a great place. Jewellery has really outperformed. So price increases in handbags have been so big that actually a Cartier Love bracelet or one of their entry-level Cartier watches is actually better value for money than a handbag. Now, the big question for investors, is that going to continue because all the luxury brands have revived themselves creatively, lots of new designers. That stock is hitting the stores now. Will that take away some of the spending from jewellery?
Yeah, Dior's got a lovely green handbag at the moment, I will say. Look, there's been some terrible news for luxury, actually, in the form of the Saks bankruptcy. Surely that's not going to be good news for the likes of LVMH. How bad actually is it when it comes to that debt?
When you look at how much is owed, it's not great. It's in millions of pounds, or dollars. But for the luxury brands, they are big companies with billions of dollars or euros in sales. They can weather it better than the smaller brands. The real pain will come for the smaller fashion brands that might be owed less, but for them it's more important.
OK, we'll see how that plays out. Andrea, thank you so much. That's Bloomberg opinion columnist Andrea Felsted. Now to some other top corporate news this morning. Elon Musk's XAI is blocking all users from being able to create sexualized images of real people with its Grok chatbot. The company says it's implemented technological measures to prevent the editing of real people in revealing clothing. It comes after widespread condemnation from governments around the world who had threatened bans and legal action. Elsewhere, the US has imposed a 25% tariff on imports of certain advanced semiconductors, including NVIDIA's H200 chip. It marks a key step in an agreement blessed by President Trump, allowing NVIDIA to ship the AI processors to China. Chips imported to support building up the US technological supply chain will be exempt. And the crew on the International Space Station have splashed down on Earth after an undisclosed medical issue forced their early return. It's the first time NASA has evacuated the space station for medical reasons. The team had been due to spend another month in orbit. The astronaut affected and the nature of the medical issue have not been disclosed for privacy reasons. Well, elsewhere, knockoff versions of Novo Nordisk's blockbuster weight loss drugs are about to appear legally in dozens of countries as the patent on the main ingredient, semaglutide, expires as soon as this year. The prospect of generic Ozempic is the subject of today's Big Take, and we can get more now with Bloomberg's Alyssa McDonald. Alyssa, just talk us through what the impact of this is expected to be.
Thanks. Yeah, well, obviously, how you see the impact depends on whether you're a patient, a company producing, or a regulator. So the patents are expiring in a bunch of big countries, basically. Canada, China, India and Brazil are among the countries where the patents are going to expire over the first half of this year. As that happens, there are dozens of generic drug makers lining up to get into this newly opened generic market. So for patients, that's obviously going to mean lower prices. Some analysts are saying prices may fall as low as $15 a month in some countries. But for the companies behind these anti-obesity drugs, this obviously means a load more competition. That's obviously going to hit Novo Nordisk hardest among this group. Novo is already kind of struggling to keep up with its main rival, Eli Lilly, and it's their product which is going off patent.
And just remind everyone how we got to that point with Novo on the back foot and how it's fighting back in other ways.
Yeah, this is the thing that's kind of interesting is obviously Novo was early to this market, super successful, and its drugs Ozempic and Wegovy, which both contain this key ingredient semaglutide, had fantastic brand recognition, loads of attention and loads of demand. But in the early days, there was a bit of a supply chain struggle, essentially. The company really struggled to keep up with this huge demand out of North America and Europe, which meant it was a bit slower to enter into other markets. And that's really given Eli Lilly the upper hand in quite a lot of parts of the world.
And of course, the market for anti-obesity drugs is, as you say, competitive, fast-growing. What else is coming down the track for that sector in 2026?
Yeah, so for Novo, it says it's fighting back on a bunch of different fronts. It launched its Wegovy pill this month, which is going to be obviously very attractive to a bunch of consumers. It's also lowering prices and launching second brands in some places, and it's working on newer sort of experimental drugs and products at this point in time as well. It's such a lucrative market. We're going to see other people, expanding their businesses as well. So what we're expecting is newer and more powerful branded products from other companies. We're expecting to see more research into this oral treatments space, but we're also expecting to see deals. Novo said it's explicitly on the hunt for new products, and they're clearly not going to be alone in that.
OK, Alyssa, thank you so much for bringing us that big take. That's Bloomberg's Alyssa McDonald. Well, turning back to our top story this morning, tech stocks leading the gains on the Stock 600, ASML hitting a record. And this, of course, is after TSMC forecast that higher than expected capital spending this year. Asia's most valuable company also forecast revenue growth close to 30%. So if we take a look at how some of the tech names are performing, you can see the read across into the European space as well. Nvidia in the pre-market up 1.1%, and that as well lifting Nasdaq futures. So we're up 0.7% there compared to up 0.4% for S&P E-minis. So as we look across the continent of Europe, you've got outperformance, as you would expect, from the Amsterdam index up 0.9% there, boosted by ASML. And in fact, ASML soaring above $500 billion value on this upbeat outlook from TSMC. So the Dutch semiconductor equipment maker benefiting from the optimism from TSMC, but particularly latching onto the line on the capex that is expected for the future. Well, we have plenty of big interviews coming up for you right here on Bloomberg TV. Bloomberg's Mac Miller is going to be speaking to the Ford CEO, Jim Farley, and the Red Bull Formula One team principal. Those conversations on open interest coming up at 2 p.m. London time. And, of course, we'll have special coverage from the World Economic Forum's annual meeting in Davos all next week. That'll be live right here on The Pulse. Up next, Bloomberg Brief. We'll pass the baton from London to New York. This is Bloomberg. Good morning.